Yeah, Ben, inflation last month in June jumped more than 9%, which has not been seen since the 1980s. The Federal Reserve is increasing the interest rate yet again with the hopes of slowing down the economy. So what does this mean for you?
Yeah, I used to get like 12 to 13 items in Walmart for $100. Now it's like 8 to 9.
The high price to purchase has taken a dip in people's wallets. Food is more expensive, gas, and just about everything else at the store. The Federal Reserve is trying to slow the economy by raising the interest rate 0.75%.
We have an inflation problem. It's been about a year, little more than a year actually.
Osman Kilij is a finance professor at Quinnipiac University. He says the purchasing power of your dollar has gone down as inflation goes up. Raising the interest rate will raise the value of the dollar, so demand will decline. Prices go up when there's more demand than there is supply.
So when the demand declines, inflation level, if the supply stays the same, should come down.
How does this impact you? If you have a credit card, your rate will go up. If you have an auto loan or a mortgage that isn't a set rate, same thing. Looking to borrow money to buy a car, now may not be the best time.
I haven't been affected yet because I don't have a car and I don't own a home here. But I'm planning to buy a car, and this is not the right time to buy a car because of the interest rates.
By raising the borrowing rate, it costs more to take out a loan, and people will likely do it less and slow inflation. He says this is a necessary decision to slow the economy, but Kilij says too slow of growth could lead to a recession. The professor recommends people save instead of spend during the slow growth period. And if you're wondering if the higher interest rate will make you more money at the bank, it won't make much of a difference.
Some banks pay 1.5, 1.7% interest. Inflation is 9%.
And I asked the professor, when will this impact be felt, let's say at the grocery store? The answer, unfortunately, not tomorrow, but instead 6 to 9 months. He says there is a possibility the Feds increase that interest rate yet again within the year. That'll be determined by economic growth and employment. In the studio, Tony Black, Fox 61 News.